This is Trade Flow News, bringing you relevant news and insights from around the world. Trade Flow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets. Europe last month remained the top destination for shipments of U.S. liquefied natural gas, LNG, according to Refinitiv data, outpacing exports to Asia for the second month in a row. About two-thirds of U.S. LNG volumes went to Europe last month, compared to around 61% in December when sky-high European prices and demand drove U.S. LNG exports to a record, Refinitiv data showed. In both months, a lack of supply drove demand and led to cargoes being rerouted from other destinations. The crisis over the Ukraine has highlighted Europe's dependency on Russia for much of its natural gas and spurred buyers to seek supplies elsewhere.
OPEC Plus will likely stick to plans for a moderate rise in its oil output target when it meets on Wednesday, sources from the group said, despite pressure from top consumers for more supply after crude prices hit 7-year highs. The Organization of the Petroleum Exporting Countries and Allies led by Russia, a group known as OPEC Plus which produces more than 40% of global oil supply, has faced calls from the United States, India and others to pump more oil as economies recover from the pandemic. But OPEC Plus has stuck to monthly increases of 400,000 barrels per day, BPD, to its target and blamed surging prices on the failure of consuming nations to ensure adequate investment in fossil fuels as they shift to greener energy.
Moving on to the top news in the energy sector.
Russian output of oil and gas condensate rose in January to 11 million barrels per day, BPD, a level unseen since April 2020, according to Reuters calculations based on an Interfax report on Wednesday that cited Energy Ministry data. Russia has been restoring its oil output in tandem with the Organization of the Petroleum Exporting Countries, OPEC, and its allies, a group known as OPEC Plus, amid a recovery in demand, which had been dented by the pandemic. Russian oil and gas condensate production rose last month from 10.90 million barrels of oil per day in December. In tons, production was 46.53 million in January, Interfax said, up from 46.11 million in December.
Oil prices were steady on Wednesday as investors waited for the outcome of an OPEC Plus meeting and official U.S. data on crude and product inventories to gauge supplies. Tight global supplies and geopolitical tensions in Eastern Europe and the Middle East have boosted oil prices by about 15% so far this year. On Friday, crude benchmarks hit their highest prices since October 2014, with Brent touching $91.70 and U.S. crude hitting $88.84. Brent crude was down 21 cents, or 0.24%, to $89.16 a barrel by 12:01 GMT, after easing 10 cents on Tuesday. U.S. West Texas Intermediate crude was flat at $88.20 a barrel.
Next, we have the top news in metal markets.
Chile's Constituent Assembly approved on Tuesday an early-stage proposal that could lead to the nationalization of the country's copper industry, sparking an angry response from mining firms in the world's top producer of the red metal. The Environmental Commission of the Assembly, which is drafting Chile's new constitution, green-lit the proposal for the nationalization and new social and environmental management of copper mining, lithium and other strategic assets. The proposal would still face a vote from the full assembly to be included in the final draft text, which would itself go before a national referendum vote later this year.
Gold steadied around the important $1,800 level on Wednesday as a pullback in the U.S. dollar and Treasury yields cushioned a jump in investor appetite for riskier assets. Spot gold gained 0.2% at $1,803.30 per ounce at 12:40 GMT. U.S. gold futures rose 0.2% to $1,804.50. Gold is very much a range-driven market at the moment, said Michael Hewson, chief market analyst at CMC Markets UK. He added the metal was also unlikely to find direction in the near term as record-high Eurozone inflation pressures the European Central Bank narrative that it would not raise interest rates this year. We will now look at the top news in the agricultural sector. Chicago soybean futures rose for a seventh straight session on Wednesday as the breaking of chart levels fueled a rally sparked by reduced forecasts for South American harvests. Corn edged up as it drew support from soybeans while wheat also ticked higher following losses earlier this week. The most active soybean contract SV1 on the Chicago Board of Trade, CBOT, was up 1.5% at $15.51 minus 1/2 per bushel by 12:47 GMT.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.